The Dapper Dividends podcast is filmed before a live studio audience. What's going on, everybody? It's the one, the only, Russ. Hey, how's it going? I'm here. What's going on? It's almost Halloween time. This is my buddy. I don't think we've given him a name yet. This is Scully. Halloween. We're all getting in the mood here. We'll just lay him down on the ground there. And what's going on? So happy to see all y'all in the house once again. We literally just rolled in the door, went to a corn maze today out in, I don't know, I think Plainfield, Illinois or something. So it's so good to see all of you guys back once again for our weekly Sunday communion to get the week kicked off, get things going and rolling, rip rocking and rolling. And this one's kind of fun. Yeah, I admit it may be a little bit of a stretch on the whole title and thumbnail, but I wanted to show you guys and girls, ladies and gents, whoever's watching this, a kind of a cool way that you can get some new and fresh stock ideas, or at least they may be new to you. So why don't we jump? I'm going to say hello to you guys real quick. Look at this spread that we got going on here on another wonderful Sunday night. Not wonderful Sunday if you're a Chicago Bears fan, but hey, we can't all be winners, but we can all be smarter dividend investors. And hopefully we're going to do some of that together right here, right now, tonight, live and in person. So what up, Shamir? Always love to see you. We got all you, dude, everybody, Shamir, Steve, birds, bees, and trees. I don't think we've met before. So I will give you a quick salute and say thank you. And John, yes, we will at some point take a very quick peek into VF Corp. They own Vans and Kraft Heinz. As you just want to know about them, I'll give you my quick thoughts on those. And Will from Kansas City, your Chiefs demolished the Bears. Hey, it's okay. Anyway, so let's do it. Let's get into it. I have a link in the description below for where you can do this, where you can get the free stock ideas, or at least new to you stock ideas. And we're going to take a little trip right here. Just uno momento. Right here. Here we go. So this is the ETFdatabase.com. And there's something called thematic investing. There I am looking at myself. I'm old, people. I'm paranoid that I'm not going to be broadcasting to the world. So, you know what I didn't do? We always forget to do this. Sorry for that little bit of streamception going on there. Want to get you more real estate so you can see what's going on. And yeah, what you can do here. So click this link down below. It'll bring you to ETF database. And there are thematic ETFs, meaning that an ETF fund manager will hand select stocks that fit with a theme. Now, they all don't pay dividends, but as you can see right here, let's go a little bit bigger for some of you that may have older eyes, but this is just cool. I mean, adult entertainment ETFs. There are a ton. If you want a Catholic values ETF, I think I even saw one that was, European small cap. You can knock yourself out. Look through a ton of them. I know there's a dividend one I went through. We got leveraged. I would stay away from leveraged, meaning they're using debt to get those returns. But yeah, Sharia compliant. We'll start with just the fun one. We'll just do our dividend one, just since this is channel about dividend investing. And if I get all the way to the D's, I told you there's a lot. So dividend growth ETFs, you can click on one and they will show you a whole bunch of ETFs that are dividend growth or fit in with that theme. So you're just going to have two parts here. One is through this ETF database. And actually, let's go one I've never looked at before. So let's see. We'll pick one at random. And I'd love to know your thoughts. Have you ever done something like this, looking at the holdings in an ETF in order to get some ideas? So how about we do the Harbor Dividend Growth Leaders just for the heck of it. So the ticker, well, we didn't even have to click that if we didn't want to, but this is the first part of the screen. What I want to show you, expense ratio 0.50. So it means you're paying 50 cents for every $100 invested, or what, $50 for every $10,000 invested. So this, I'd rather use Seeking Alpha because it's a little bit more in depth, I guess, but I was using this to get some of those themes. So this is GDIV, remember. Now we'll go to Seeking Alpha, but the way I'm going to do this, if I can reach you here, is, oh, there we go. Move that. Sorry, I didn't know I could do that. This is an incognito window. So this is going to show you for free, because that's what it's all about. Pop on over to Seeking Alpha, even if you don't have an account. If you do and you want $50 off the $239 regular price, I have a link down below, an affiliate link. Click that if you'd be so kind. So, man, what we will do is scroll down, 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 make it a little bigger, and just look at the top 10. Come on, throat. The top 10. Apple, Microsoft, Eli Lilly, United Health. And this is where you can get some interesting ideas. Click on Arthur J. Gallagher and Company, which I've never looked into. Currently paying $2.20, 0.94% yield. And if you want to knock yourself out, come on, get out of there. They're not going to give you the analyst ratings right here. So I don't know if you can see this. If I flip back to, let's do this, GDIV. Come on, buddy. Come on. Here we go. So you'll see the difference between the paid and the unpaid is that you won't be able to read those articles. I think I went right by it. Where are they? What's going on here, man? Well, this was a bad one to pick anyway. Hey, it's what happens. So the point of it being that, yeah, where's my analysis? What's going on here, man? Hold on. Hold the phone, everybody. Where's the analysis? Fund. I don't know. What, they're not going to give me an analysis on my paid? Let's try and refresh this once again. I don't know what the heck's going on here with good old Seeking Alpha. But either way, it would show you in the analysis if they are a buy or a hold or whatnot. And let's do one more fun one. Let's, let me do this. Just because I haven't done one. All right, we do dividends. So come on, man. Cooperate with me. This is what the beauty of being live is, right? Click back one more time. How about we do just because I want to see if our favorite one in there, Rick. Those of you that have been with us for a while, here we go. The adult entertainment ETFs. See how many of them there are. What do we got? Yeah, I probably should have did this earlier, right? Yeah, I don't really see this isn't working out, people. This is not working out how I thought it would be. We're going to try one more because I'm going to have some after we're done here, the alcohol ETFs. Again, you can dig into these, right? Let's see. What do we got here? The hotel and lodging ETF, the Invesco leisure and entertainment ETF. So PEJ, okay? We're going to go PEJ, leisure, or is it leisure? All right, let's see what we get turned up here. So there you go. So you can see hold, sell, blah, blah, blah. And we'll go back to the good old incognito window of the PEJ, the PEJ. And hide this once again. I made it bigger for you guys. So there you go. See, it doesn't give you, so you're going to be limited on what you can see with, there you go, hold, sell. They hide all that when you're on incognito. But the point of this whole exercise
is to look at the top 10 holdings. Now, you can view all the holdings, but hotel and leisure, we got Airbnb, Chipotle, Booking Holdings, Marriott, Royal Caribbean, Delta, Warner Brothers. Now, there you go. You might be like, Lionsgate Entertainment. Interesting. I've never looked into Lionsgate Entertainment. I remember them making movies when I was young. Because I'm not signed in, we keep getting this. And currently, they don't pay a dividend. So I didn't know that was a dividend stock, but let's just pick one in case you do want to invest in something for dividends. Let's pick, well, we'll pick one that I know does. We'll pick Delta Airlines. Why not? So right there, we see the dividend rate, 10 cents per share. That's annual, 0.27% yield, very small. So you can get some analysis. Remember, this is all incognito. And if you click on dividends, they will give you a bunch of dividend history, and you can see the growth. There's the dividend history until they cut in January of 2020, started paying again. So you can still get a fair amount for free. They'll show you the price and the dividend history as well. And just a lot of good stuff, a lot of cool ways to get an idea. And even if you didn't want the individual stock, well, dude, you can always just invest into that ETF as well, which this one is a 0.58%. So there you go. That's a really, really brutally quick way to get some fresh ideas, maybe look into some thematic ETF ideas as we close this guy, and we'll jump back in just a second. But I thought I saw one more goofy one on there. Maybe not. AI ETFs, autonomous vehicles, so disruptive tech. Not a lot of these might not pay dividends, but gambling, there you go. So have at it. You now have an idea to look at a bunch of different individual stocks and ETFs if you so wanted to with your yes. So Andrew, I saw this one. The one I was looking at was RICK, which is ticker RICK, and it is, what is the name of it? They own RCI Hospitality. They own Rick's Cabaret, I believe. They own, so Rick's Cabaret, Jaguars, Tootsie's, XTC, a bunch of strips clubs and some sports bars. So if you wanted to invest in that, you can do that. Our ticker RCI is one of the interesting ones in that space. So yes, I will say that I am back looking at your comments. Let's get a good one. What did you guys buy? Oh, this week? Let me know also what you think about this. How do you get new stock ideas? Have you ever done that? Have you ever pulled up an ETF and looked at the top 10 holdings to see if there's something interesting in there that you might want to invest into outright? Dude, Will, that stinks for you too then, because the Broncos got killed 70-20 today. That was not too well. Yeah, so Charles Schwab also has a thematic section, but I wanted to do this in a way for somebody to just completely free. You don't have to have a brokerage. You don't have to, well, if you're buying stocks, you're going to have a brokerage. But yeah, I didn't want to relegate this just to Schwab or just to Fidelity or Vanguard or wherever it may be. But yeah, check on your brokerage. Good point, man, to see if there is a thematic stock section. So holy cow, Harsha, you've been buying a lot of stuff. What do we got there? So far, all ETFs, I believe. I don't know MGK, so no way. Meet Kevin as an ETF called PP. Hey, good for him. Yeah, I think it's on Twitter. I don't think it's anyone in our community. There is, I think, Journeyman Portfolio on Twitter. If you've seen him, I believe it's that account that they are Sharia compliant. So they don't invest in any of the sin stocks. And because I didn't realize that because of their religion, they also can't invest into anything that loans money. So all the banks, all the BDCs, I think even that extends to the REITs. They can't invest in REITs. So that is Wallet Invest. Dude, don't mean to presuppose, but I sold 25 shares of Target this week. If you get the newsletter, I think I still have it up. Yeah. So actually watch this. Check this out, all y'all. We're going to share with you the news. I'm going to share with you my newsletter. So you can go to dapperdividends.com, or you can go to, sorry, let me hide your comment. Wallet Invest. I'll show you what I did with my Target shares. So we do that. So here we go. This was my newsletter that I put out today. And make it a little bigger there. So I just gave a real quick thing about not worrying about what the market's doing, zooming out, looking at the long term, because the further you go out, the market is always going to go up and to the right, because the stocks, they innovate, they increase their earnings, they become more profitable, and they become more valuable in aggregate. Yes, some go in and out, but what I wanted to show you was, there you go, the dividends I received this week. Dude, next week is going to be huge, almost $500 in dividends. I know. Stay tuned. I'll put out a post tomorrow. But there it is. So this is what I did. I sold 25 shares of Target, and I predominantly put that into Nexstar Media right here. 21 shares of Nexstar, bought on average of $149. And yeah, that's just been getting killed by the strikes, potential recessionary headwinds that may finally be coming. Markets getting spooked. There's multiple headwinds hitting Nexstar, but I'm at 96 shares. I'm going to get to that 100. So yeah, I sold Target at $119.30. And what happened? Don't you hate this? I see Ryan gets that too. Yeah, it dropped. We may see Target around $100 a share at this rate. But yeah, then I bought 15 more Vici and one more SCHD. So that is the newsletter. And again, every Sunday I put that thing out. Quick thought, sign up for it if you want. And yeah, I'd love to know. Great point. Is anybody else buying Target, or are you going to wait? Are you waiting for them to hit that proverbial bottom before they start coming back up? Is there a coal ETF? There's a firearms ETF. I see a carbon intensity ETFs. So that is good. Nice. Sorry, I'm talking and reading. Yeah, I think it's the opposite. I think that's more of a, yeah. So a coal ETF, I think that might be the opposite of it. Good question. Pricing power. Okay. Yeah. See, I've never really watched Meet Kevin. I know, crazy. That's like a sacrilege around this space. But what do you guys think of Meet Kevin? Do you watch Meet Kevin? Did you watch Meet Kevin? What do you think about Mr. Meet Kevin? Yeah, Andrew, we talked about that one, which is Rick. And good. Let's pop real quick into Simply Safe, and then I'm going to get to news. We'll do news. Actually, let's do news right now, since I'm kind of close to you guys caught up. But yeah, if you didn't catch it, so we do this once in a while. Let me make this even bigger. Look at that, even bigger for you guys. Microsoft raised their dividend 10%. Shout out to some of you. I know Duke of Prunes. He doesn't join us on the live stream. Dude's held Microsoft forever. Has a really sick yield on cost on Microsoft. But yeah, 10%. So still not even 1%, but they grow that dividend really, really quickly. And they're just a beast. The electric utility company Fortis, I think they might be Canadian. So I don't know if they are a dividend king, because if they're not a member of the S&P 500. But I said, hey, you know what? They're a Dapper dividend king if you're hitting that 50 years. So we will bestow the crown onto Fortis. Pembina, they refreshed the outlook on them. They used to be a monthly dividend paying stock, and then they decided to not be a monthly dividend paying stock. That's Pembina. BlackRock Health Sciences Trust. I don't know anything about that one, but it was upgraded. Don't worry, you can pause the video, go back, pause it if you want to read us a little bit more. New Tech, don't know about, ticker Newt. Marsha McLennan. Does anyone know? I think Buffett. Well, we say Buffett. Berkshire is more apropos because it could have been one of the lieutenants. It could have been Todd or Ted that would have sold that. But I think they sold out of Marsha McLennan. Olin, which is a chemical company out of St. Louis, Missouri, I believe, got a dividend upgrade. This looks very similar to the Chase logo, so I think they stole it there. But Costamare, ticker CMRE, is a marine transportation stock. They were upgraded, big upgrade from very unsafe to unsafe. So you might want to stay away from that one or go into it. It's your money. You can do what you want with it. You can go spend it at, Jaguars if you want to. Brandywine, office REITs, dudettes, problems with the office space. The office apocalypse is upon us, right? So they cut that dividend. American Tower raised their dividend 3.2%. There's a lot of these. I don't want to get stuck on it. S-Bucks, Starbucks, what's going on? Starbucks increased their dividend 7.5%, which is the 13th consecutive year. So like Starbucks, they have really quick dividend growth, by the way. And Texas Instruments, TXN. Oh, wait, Texas Instruments. They raised that dividend. I apologize to anybody from Texas. That's said out of love, More Cowboy Curtis, big fan of Lawrence Fishburne. Probably not from Texas. Anyway, 20 years now, but they've paid uninterrupted dividends since 1962 and repurchased roughly 50% of the outstanding shares since 2004. Texas Instruments, God bless them. WP Carey, I'm sure you guys tune into Ryan's about this. I was on my way to see Wheeler Walker Jr., or is it Walker Wheeler Jr.? The country guy. I'm not a country guy, but some of my cohorts wanted to go see it, so we went to Rosemont. But yeah, they're I think 15% of WP Carey's revenue was from office properties, so they decided to get out. I think it's really interesting that Realty Income exited all of their office properties really early, or at least 90-some percent. I think they still have a couple. But yeah, anyway, to sum this up, what Simply Safe is going to do with that is they're just going to, when they get the net lease office properties, ticker NLOP, which is going to be the spinoff, they're going to sell it and just buy more WP Carey in that. Cisco, they bought Splunk, ticker. I don't know what Splunk's ticker is, but that's just one of the best names. So it's sad we can't say Splunk anymore. But I think that's going to be only like 6% of their annual revenue. So, and by the way, I can't see your guys' comments, so this is killing me. I want to get through it quick. I love talking with you guys and not at you guys, but I got information to share. So that's that. But John, we'll stick around. We'll do it in a minute, but I want to get back and caught up with the comments. I want to hear what you lovely people are saying, but I wanted to see if RCI is still indeed paying a dividend. Fast dividend growth, $60 a share. And as you can see there, you may have to pause the video if you want to read that, but yeah, they own Bombshells and Rick's Cabaret and Jaguars Club, Playmates, all the seedy strip clubs, I'm sure. Or they're nice. I don't know. Maybe they're nice. I don't go anymore. Once upon a time when Daddy was in the U.S. Navy, I was like, oh, I can't. Yeah. Anyway, so looks like they are indeed still paying that dividend. And holy cow, only a 7% free cash flow payout ratio. So they can definitely keep paying that dividend. Let me see their debt. Shares outstanding, only 9 million. So kind of flat going back to 2013. Look at their sales are way up. Obviously down the aberration in 2020. So all those big chunks missing. But yeah, I mean, if you pull out when they were forced to close, actually looks pretty interesting. 48% net debt. I don't know how you guys feel about owning a gentleman's club, but hey, if you ever wanted to own a gentleman's club, there you go. So that's ticker RICK, RCI Hospitality. So that is your adult entertain. I would have to look at the other ones because that might be the only pure play one. Boom, Kevin, I will drink to that, man. I'm at 150 shares of O, and I'm debating buying more, but I actually bought more Vici properties instead of more realty income. Sorry, my freaking fingers were stuck in the mug. Shamir, yeah, airlines do pay the dividends. It's rough though. It's not a good industry. I mean, I can't outright invest in airlines. It kind of reminds me of the autos, highly competitive, highly capital intensive. Although JetBlue might be on the ropes, right? I think some of them smell blood in the water and that. Joe, yeah, you hear the word strip club. You know, you never know what you're going to get here. And it is like a box of chocolates. Forrest Gump's proverbial box of chocolates. Mrs. Gump, is there a Mr. Gump? Is there a Mr. Gump? Going to wait, what is that? Going through Pave for ideas. Oh, interesting. Is that an ETF? Will do pray tell. Pat, you bought more realty income, Procter and Gamble, and J&J, Johnson and Johnson. I'm still stubbornly hoping that they're going to get into the low 150s, but yeah, you know, Michael, it does pay a different dividend, you know, a different kind. Hey, you know what? I don't know. What do you guys think of that? Is there like, right? I mean, I've actually been having second thoughts about investing into Altria and talked it over with my wife. We're not going to buy any more right now, but each of us, we've lost people to lung cancer because they smoked for many years. And dude, I know I have friends that their parents have passed on to the great beyond. One of my buddies, Brian, who we went to high school together, dude, his words, not mine. His parents smoked like chimneys, and his father just passed away a couple years ago. So it's a lot of investors will not invest in something if it is going to harm the consumer or harm somebody else. But where do you draw the line? And let me know, because you could make the same case for, you know, McDonald's, for PepsiCo, giving people sugar diabetes, right? But I don't know. I don't know if there's a beneficial way to use tobacco. I think it's just bad all around. So, hey, Carlos D, what's going on, man? What's the D for? You don't have to say what the D's for, you know. International VXUS or VYMI. I know VYMI is a popular one. Both of those, I believe, nice Vanguard funds. So we do love Vanguard funds around here because they're not trying to get rich off of the investor, because as I believe they are, how does that work? Right? I think I read once that they are owned by the investors. So I don't know. Is that what the expense ratio goes toward? Oh boy. Okay. Clickbait master bat. Master. Yeah. Okay. We'll just leave that one there. Shamir watches me, Kevin, once in a while, treats him like all yous. Yeah, it is funny. It is entertainment. And, you know, people, all 51 of you watching, is that I'm at a crossroads because honestly, I've done videos just for the views, and I'm trying to get to a place where A, sharing my journey, what I'm doing as a dividend investor, and B, trying to help you become a better dividend investor. So I think, you know, I don't want to do a dozen SCHD videos all in a row, but if I have something to say that can help somebody be a better and more informed investor, then I think it makes sense to do it. But, you know, I ain't going to lie. It is nice when you give those videos blow up. It's a little bit intoxicating, I guess, but only know of Meet Kevin from his DUI arrest video. I still haven't seen that DUI arrest video. Hopefully nobody was harmed in the making of that video is what I do hope for. Can't use hope that many times. Do people invest in a lot of bank stock dividends? Well, Andrew, actually, you know, I would say invest in the bank first and then receive the dividend as a distant second. And it can be hard to separate the dividend from why we invest into a business. There we go, Mr. Mike. But yeah, you look at a yield and the yield looks juicy and fat and you want to just buy that, but there's the whole yield chasing and the yield traps. And I've gotten trapped myself, and you start making excuses. It's like an addiction, it's almost like an abusive spouse. You start making excuses for them because you're comfortable with them, I guess. I don't know. But that's a terrible analogy to make. We certainly don't advocate spousal abuse around here, domestic violence of any sort. But yeah, I mean, you got to look at the business first. You always buy the business and not the dividend. And if they happen to pay a dividend that's sustainable and growing, so be it. But you can't ever just buy that dividend. I mean, you can, but yeah, Dividend King. Oh, dude, I didn't know that. So Clifford, thank you very much for sharing that. I was always under the impression that it would have to be that they were also had to be included in the S&P 500. So thank you. Yeah, it's not a huge, I mean, $3,000 for the 100 shares of Vici. It was a little more, it felt a little more momentous with PepsiCo, at least then, because that's crazy. At sometimes, like I told when PepsiCo is almost $200 a share, I was telling my wife, I'm like, it's kind of crazy right now. We have a market value of about $20,000 in PepsiCo on its face. I was like, God, this company better just keep being a good company, So I'm going to get to the bottom here and then we'll look up for, here we go. Don't let the wife find out, Russ, in terms of visiting the nightclubs. Oh, dude, no, we go to nightclubs, just not the gentlemen's clubs. And like I said, it took me a minute. It took me a minute to learn that and I guess the same could be said of casinos. From the moment you walk into a gentleman's club or a casino, they are designed to separate as much money as possible from your wallet before you walk back out the door. And that's the whole experience and atmosphere. So it's entertainment. I guess you could kind of say a word to the wise from my experience. You're not going to find love inside of gentlemen's clubs, and you're not going to find riches inside of casinos. Yes, I know there's aberrations, right? People win the lottery, but you're highly unlikely, I guess I should say, right? Never say never. Dude, nice. PAVE is an infrastructure ETF. What's the top holding in PAVE? Let me know. Is 3M in one of those? Can we use that ETF search and try out the biggest American companies doing business in India? Honestly, I thought I saw there's an India small cap ETF. So I don't think that might be a little too, I'm not seeing it. Dude, there's a boatload of Vanguard ones, weapons involvement, water stress. Yeah, I don't know about that. That one would be tough because that could change quite a bit. So you're just talking about American, but yeah, that one might be a little too in depth, at least for me, I would say. Yeah, Mo's personal investment decision. Why y'all talking like you're from the South there? I don't know. Oh boy, here we go. Dude, awesome. No morals at all when it comes to investing. So, hey, I guess I would say if it's legal, then you have nothing to worry about. If something is legal, then that's between you and your conscience, right? You and yourself or your spouse, if you have one. But yeah. Oh, there you go. Thank you for taking the words out of my mouth. Yeah, if it's legal, go ahead and invest. Right. Exactly. John's starting to like Target a lot. Yeah, dude, they're a dividend king. They've been around since the 60s. So very interesting story, but they are around a while. Yeah, Casey, Leco, that is Lincoln Electric. I don't own them outright. I'm sure I have exposure in a fund. And yeah, they are up my alley. I do use Lincoln welding rods, the E7014 532nd welding rod. I know that's just a whole bunch of nothing, but those are the ones that I predominantly use for 99% of what I do. Arc welding, the stick welding. So they're probably solid, but I do remember looking into them once and the yield was small and it turned me off and I discounted them because of the yield. And that's another thing you probably should never do is say, no, that starting yield is small. But if you have a lot of years and you don't need to live off that income right now or relatively soon, then like with a Microsoft, because they give bigger increases than like, well, it's PepsiCo gave a nice one than like a 3M as of late, right? So, wait, Target's been around since 1902? Maybe it's just since the 60s then that they started paying a dividend. Something like that. Oh, what would become Target? Yeah. Interesting, dude. Thank you for sharing that. That Target was predecessed. That's not a word. It was, I can't think of the word. I don't know, but it used to be. There we go. Make it simple, right? Simpler is easier. So yeah, those of you just popping in, let us know what you've been buying. If you have any questions for me, don't know why I'm smacking my hands. I'm not an angry person. I'm not a perfect person. Target and Starbucks. Yeah, I'd like to buy Starbucks. I'd like them to go down more. PH. Is that Parker Hannifin? If it is Parker Hannifin, that's also up my alley because they have a segment that makes hydraulic hoses. So Parker Fluid Power rolls off the tongue nice. Yeah, PH is a solid company from what I've looked in before, and I believe they might be an SCHD. I don't know about that. I don't remember if they are. Oh boy, that's one we could have done. I could talk to you about Eaton. So if you guys are ready for more lessons, here's another personal lesson from the vault of my many investing mistakes. And it's not growing as much, but again, we're not perfect people here. I sold Eaton because it was at about an all-time high of around in the 175-ish range. And I was like, you know what? This thing is about at an all-time high, and Nexstar Media had been starting to go down. So I was like, I'm going to sell Eaton because it looks like it's overvalued and it's at an all-time high. So let's move on. And it's moved up like another 20 or 25% from where it was at then. So the lesson there is never sell something just because it's gone up. Imagine buying Apple at, I think it was at like what, 16 or 60 cents back in the early 2000s. And imagine if you held it from 16 cents to $16, you'd be like, oh my God, this cannot go up much more. This has been such a crazy move. I got to sell and just lock in all these gains. And then look what happens. So good companies usually keep going up because they're good companies. It's not like they hit this magic all-time high and then just go back down. So that's what I would say is that I've learned to never sell something just because it's hit an all-time high and just because of price movement. You have to have another reason. I mean, if your thesis is busted, sell, but never sell just because the price has gone down, and never sell just because the price has gone up is my opinion. I bought AT&T and Cisco. Dude, Kevin, you're still buying AT&T. Pray tell, what is, if you want, you can share with us. What do you like about AT&T? I know, John. Oh, look at this, Casey. All right. So 7018. I can't do that FTW. That trips me out because I swear I remember that being F the world, not for the win. So I just think you people are like angry. He's like, are you 7018 Rod? The world, So nice. You're an arc welder too. Cool. Where do you weld? What kind of, we won't turn into this. You can email me. What kind of welder do you have? I got a Bobcat. Still buying Mo. Has it been true that people have been known to buy 10,000 shares of Yeah, of course, dude. Maybe not me, but institutions will do that all day long. Oh, look at this. Finally logged on when you're live. I don't think you meant that to be a question, because if you're asking me, I'm going to say, well, I'm live and you dropped your comments in the comments. So yeah, I'm going to say, yes, you did. Congratulations on a job well done, shipmate. You're all my shipmates. Oh, look at that. It is you, right? Journeyman, you're the one from Twitter, right? We talk on Twitter. I thought it was you. Maybe it's somebody else. I thought it was you that is Sharia compliant. Maybe not. But I'm going to get caught up. John, I haven't forgotten about you. We're going to do that real quick. And Eaton, don't see 3M. Yeah, Eaton, God, I wish I would have held them, but I bought them in the depths of the pandemic sell-off, right around like $84, $85 a share. And I was like, you know what? It's gone up about $100 a share since I bought it. I should sell. That was a bad idea. People, whoever's listening, don't just sell some unless it's rocket shipped up and it's like 40% of your portfolio, then maybe to trim it and get it back down some. But yeah. Nice, Tommy. What's up, little Tommy? Buying some, well, maybe not little, some Realty Income and Agree Realty and Triple N. We got more Hershey. All right. Hershey, Medtronic, Waste Management, Republic Services Group, and even nibbling on Energy Transfer, Viatris, Kinder Morgan, and OGN. Is that Organon? What is OGN? Is that what was spun off from Merck? I think they're like women's healthcare, right? They're women's focused. 3M, buddy. I don't know about going to the top. I don't know where the bottom is. I think they're going to cut the dividend. When they cut that dividend, they're going to be booted from the Dividend King ETF. There's going to be a lot of funds that are going to be forced to sell 3M. It's going to put a lot of pressure. So oddly enough, I don't think I would be comfortable buying 3M until they cut that dividend and the smoke clears and it looks like a solid floor has been put in, because otherwise we're just speculating and we're just hoping that they don't go down too far. So I would wait on that. And oh, Kevin's the clickbait master. I thought we were talking about the strip club still. Yeah, I will say I took a YouTube course, and one of the things they said in it was, and this is a little behind the scenes, what you can kind of see is for looking at other YouTubers making videos, is they said you need to push the boundary of clickbait. Like you still have to deliver on what, like today's, that was a little bit, like free stock tip. You deserve a free stock idea. Well, it was. And that's why I wanted to do it without a paid version of Seeking Alpha, without showing a brokerage or anything like that, just completely, just you go to the ETF database and you go to the free, even incognito version of Seeking Alpha, and you can get some ideas to do a little more digging into on your own. So, John, I'm going to get caught up here. I think I'm almost, and then I will look at your really. So, yeah, Stanky, dude, there we go. You guys want to learn? Get your notepads out, because CEOs, every CEO is where they are. Let me think about this. Unless they are the founder, kind of like, I would think like a Perry Sook from Nexstar Media. He founded the company in 1996. So he's the founder and CEO, but like a John Stanky, like a, I forgot his name. I want to throw it out there. The Starbucks CEO, they call him Laxman Narasimhan, I think. He was the CEO of Becton Dickinson, BDX, right? No. Either way, he was the CEO of a company that was kind of like the Procter & Gamble or so of of England. But a lot of the CEOs are great spin masters. They are really slick. They can really get you believing in the direction of a company. I would say that most CEOs are masters at putting lipstick on a pig. And they're the kind that you're like, you'd go into their office like, I'm going to give this guy a piece of my mind and tell him what I think. And then you leave and you're like, that guy's really, really nice. What a pleasure I got to speak with him. That's kind of like how CEOs are. So I'm learning as I'm moving through this journey with all of you is to really try to take what the CEOs say with a grain of salt and dig into the numbers. And what do the numbers say? We understand the narrative they're saying. But like another one, I think like Mark Baum from Harrow Health. Yes, they've been getting crushed, but he's another one. He founded the company. And maybe you could even say that in order to found something, you have to have that spin meister ability, right? So, okay, I was right. Look, yours truly remembered. So Organon was the spinoff from Merck. Trayvon, nice to see you. Journeyman started new position in enterprise products partners. I've stubbornly been waiting for the 25 and below, and it's just not getting there. It's not cooperating with me. And Shamir, nice one. We love jokes around here that they're not as toxic as their lead kit. I think some of that could have been overblown. I've read some of it that, because they've had these things in the ground forever. For which one? Birds, bees, and trees? BBT? All right. John has been patiently waiting. There you go. Thank you. Laxman Narasim. See? I'm pushing. I'm not even that old. What am I saying? I'm 45 and I can still remember this. I just love it. Stinky should run for Congress. Dude, could you imagine? Yeah, that's probably why some CEOs and politicians get along so well, is because they're so used to putting lipsticks on pigs, right? Lipstick on pigs. Maybe it's lipsticks. ET? Oh, Matt, you want to see something crazy? Okay, John, get ready. So I'm going to look for you really quick. But ET, this is one I wish I would have bought a little more. I'm going to bring you guys into my portfolio here. Do that, make it full screen. My portfolio. Oh, by the way, click the link below, dapperdividends.com, and you will see. Come on. Why? If anybody knows why I have such problems with Simply Safe, only Simply Safe loading up when I'm live. But let's see. This is the portfolio. I know I'm going to be blocking some of those down there with my big self, but let me find ET here. Check this out, everybody. Let me put it toward the top here. So I have 31 shares of ET with a cost per share of $6.19. That's a gain of 123%. Yield on cost of 20%. It's only 31 shares, and I don't know why I didn't buy more, but it's because I was also buying. I'll show you why. I was buying this guy right here, Chevron, which I'm up 96% on, 7% yield on cost. And the other one will go down low. Yeah, nobody look at Harrow Health. I'm down 25%. It's okay. I plan to hold this for a long time. Who was I going to show you? Yeah, you guys can pause this if you want to look. I also, like I said, you won't be able to see this portfolio view, unfortunately. Next start, 96. I want to get to that. I'm going to get that up to 100 maybe this week. If it dips into the 130s, I'm probably back into the mid 130s. What I'm looking for on that little bit of charting here is I'm looking for it to make higher lows. So the low was 133, and I'm looking for another low to be made around 138, 139 here. So what was I showing you? Oh, yes. PepsiCo. Nice. My yield on cost, 3.37%. It was ExxonMobil. Where are you? All right, here we go. ExxonMobil. Up 154% on ExxonMobil, 8% yield. So this shows you like why. Yeah, I wish I would have bought more, but my cost per share is $45 on Exxon. I should have, if I was psychic, went hardcore into Exxon, Chevron, EPD, um, Energy Transfer. Would have went into all of those. What a great! I don't know if we'll see a buying opportunity like that again with those. So, but John, buddy, real quick, for all of you who's watching, I'm gonna go very fast because I know you guys may not mind, but pause the video, John. Go back. I'll do VF Corp and then Kraft Heinz real quick. 6% yield. Hope this loads up here. See how long it takes? Yeah, dividend cut. They became a dividend king, and then they cut the dividend. And I think right here we see that little notch down. I think they had a spin-off or something, but they kept investors whole. And there's something that stood out about them for me here that I don't like. Yeah, down to $17 a share, another 52-week low for VF Corp. They own like Vans and Supreme and North Face, I think. Bunch of other brands. You guys can look them up. But yeah, look at this yucky free cash flow payout ratio. It was negative and then 130%, 140, negative. Just, you start seeing that stuff. No bueno. Free clash. The clash. Yeah, just choppy all around. But one thing I don't like, look at this. The total sales, 11.9 billion in 2014, 11.4 billion now. So from 2014 to the last 12 months, just been flat. We don't like to see this. And yes, even though they bought back shares, sales are just stagnant. That's a red flag. Return on invested capital, it's just been going lower, just grinding lower, man. You know what I mean? This is what you look for, just like skeleton teeth or something. Up, down, up, down. Not good. Not good. Free cash flow margin. And their debt has been going up. So, John, I don't feel comfortable. Interest coverage ratio, they may have to cut that dividend again. I would not feel comfortable with them. And Kraft Heinz, so also 4.68% yield. And we'll go through this a little quicker. See, does anyone know what I can do? I'm on a laptop that's powered by, I don't know, Intel Core something. Finally, thank you. Only when I'm live. It's probably because it's an old. Look at that. cut, flat. I don't like that. It's not a dividend growth stock. Dividend's been frozen since December 2020, probably even longer. Yeah, dividend yields, but this tells us nothing about where something's going, but it doesn't get me excited. Here we go again. Free cash flow payout ratio, negative 400, 200, negative 400, 100, and then 70. And now we're back to what? I wouldn't even bother, man. There's better things to buy out there. Free cash flow per share is just up, down, negative. Sales growth, yucky. Shares outstanding, flat. Total sales, yeah, it's pretty flat since 2016. And right, this is when they had those acquisitions or they did the 3G merger, whatever it was. Yeah, just low return on invested capital. Free cash flow margin, yo-yoing, and it's low. Although they do have low debt. So it's just, they're probably going to be able to pay that dividend, but I don't know. It's just not exciting. What do you guys think about VFC or Kraft Heinz? My opinion, I'm not interested in either one. Not at all. Nice. The BB&T, the Birds, Bees, and Trees, used to work for Merck. Nice. So is that why you got Organon then, I'm guessing? Oh, back in 2006. That was a while ago. Do people live near Wall Street to close enough to buy? No, I don't think that's how it works nowadays, Andrew. No, it's an exciting area, I'm sure, but especially today. Now, look at Warren Buffett. Dude, Warren Buffett moved as far away as he could. Well, not as far, but he didn't want to be influenced by Wall Street and by all the hubbub and the glitz and the glamour and just everything going on with Wall Street. So that's why he moved back, from what I understand, to Omaha to be away from Wall Street, because it really messes with fund managers' minds, and he didn't want to get wrapped up into that. So, yeah, no. And Tales from the Crypt. I love it. By the way, make sure y'all, when you do shop smart, shop smart. You got that? I think this is deja vu. I'm pretty sure I wore this shirt last weekend, but I wore it to the corn maze. Matt, you brought up, sorry, Birds Bees. I didn't see that. You brought up Petrobras, right? I think I said it. I think it's a lot of risk because it's owned by the government, right? They have a majority stake, the Brazilian government. But yeah, that's an interesting one. So here's the thing: ET may be risky, but when you have such a very low cost basis, like it really. So that's what buying ExxonMobil and what you have to do in situations like that. And I remember thinking this was at the time, it was scary when you were in it. I mean, it was like the oil companies, you were going to get paid money to hold a barrel of oil in your garage or something. Remember when it was below, it was negative, the price of a barrel of oil. So you have to say, is this the end of oil? Is this the end of the oil companies? And if your answer is no, then I think it's a great time to buy to get and establish that super low margin of safety. And eventually it may go lower, but if it's not the end, they will recover. We just don't know when and how long it's going to be. And I didn't expect it to be that quick, but yeah, so I agree, man, but that's, yeah, it was scary. Oil cyclical, agree. I think me more, yeah. Let's see, man. I hope so. I don't know if we'll get that low again, but that's why, dude, you got to be ready. We have to be ready when some of these crazy things happen and everybody panic sells. That's our time to just go and buy and hold. And this was kind of like the main thought with the newsletter is that you got to say, is the world going to end? And if the answer is yes, then it's not going to matter anyway. If it's a Walking Dead scenario and the world ends, who cares? Your stocks are worthless anyway. Everything's going to be up, but if the world isn't going to end, then it's just a great time to buy. And that's what I remember. I remember my thoughts in March of 2020 when everything was just going crazy. I was like, you know what? Don't know how long this is going to last, but if this is a virus and it doesn't immediately kill off most of the human race and just decimate life as we know it, they're going to find a cure or what's the word I'm looking for? Just, oh my God, a vaccine. They're going to create something and eventually life will get back to the way we know it. So I was like, why wouldn't I buy? Why would I sell? Like, that's crazy. But you just, it's scary in the moment because you don't know how bad it's going to get. So, you know what? That's right, Kevin, because I wear Dickies. That's about all I wear is Dickies. So they do that. What is that? Somebody, before I jump off, Matt, what is Salivate Metal live stream? Is that a YouTube channel? I need to know. I need to know right now. Yeah, KHC, very lackluster. Good point. I am going to ding you on putting an E at the end of lackluster. I know you're Canadian. I'm teasing, Shamir. I'm teasing, buddy. You guys spell, it's like center. I remember when I get the hockey cards as a kid, I'm like, they spelled center wrong. CENTRE. That's not how you spell center. So, yes, I know. Oh, dude. As well. There he is. What's going on, man? A lot of BlackRock and Next Era Energy. Yeah, Next Era. And this is the problem when it's hard because you see things you want to buy, but I don't want to own 100 stocks. So, trying to relegate stuff like that and just being okay owning it in a fund or something. So, all right, I'm going to get caught up to all of you peeps here. So I apologize if I did. Okay. So he got back to me. I didn't steal it dude. It's not stealing. It's a tribute. I love it. I love Bruce Campbell. At Groovy Bruce on Twitter. Dude, Bruce Campbell is the man. Bruce Campbell is always welcome to stop by the Dapper Dividends compound here, the homestead, to hang out and come on the channel and have some food or whatever he wants. I don't know. Always, right? Precious metals. You know what? That's a whole nother discussion. Maybe I'll do that next Sunday. Maybe I'll have you just gave me a great idea, man. Matt. I am going to write down an idea I just had for next weekend. Lock it in. I like it. It'll give me a minute to share a few thoughts. I have a couple quotes that I'm going to put on a little card or something, and we'll talk about it. I would love it. Bill, why didn't you bring this up earlier? Yes, now is the time to buy REITs. I'm at 150 shares in the retirement account of Realty Income, and eventually someday they're going to recover. So the last thing I'll say about that is that when the rates eventually do start to get cut, which will happen someday, and even if not, dude, you're investing in real estate, one of the most recession-proof things, well-run businesses. Now, not all businesses are the same, so we still want those well-run businesses, but if they're still growing their FFO per share and becoming a more valuable company, I don't care what rates are doing. If rates are even at 4%, factoring in inflation, what is that going to be a real yield or real yield of maybe like 2-3%, something like that. I think eventually REITs are going to start looking attractive once again, and money's going to flow back into them. So Sal is a precious metal channel. Nice. Well, hold that thought, Casey. But yeah, I'd like next Sunday night. I got it written down. This is going to be the topic, unless something crazy happens and it supersedes it. We're going to do that. Yes, there is a REIT. I want to share this with you before. So, Shamir, you probably know. Which is that one? It's the one Michael Burry owned. It's a private. It's a REIT that's, somebody throw it in there. Come on. Google it. Hurry up. I got an IPA with my name on it and some TV to watch before I get going. Oh, by the way, Costco on Tuesday, Costco drops their earnings. And on Thursday, Nike drops their earnings. Was just talking with Ryan Williams and Harris Elliott from One Penny at a Time. We're both liking Nike. And I was like, you know what? If it drops, I'm going to do that. I'm going to likely start that with them. Thank you. JR, finally, you say something, man. I've been waiting. I can't see who's watching. I don't know. You people pop in and out. But yes, Geo, that's the one Michael Burry owns or whatever. And that's mine. I will not invest in any prison REITs because I think there are far too many people incarcerated for nonviolent crimes here in the United States. So I will not do that. Freedom Stacker, you gave us some money. And again, thank you, my man. Thank you. So for that, we're going to end it here with my guy, Scully guy here. Dude, we don't wear hats like that. Fix your hat, son. People, if you just popped in, people are like, what in the hell is going on? But my buddy here and I'm probably breaking it. Yeah. So I thank you. We thank you for the, there you go. It's a little better. We thank you for the donation of the $5. Really do appreciate it. And I will say it again. I always say it to all y'all. Look, give money to a charity, give money to a kid, give money to somebody. You don't have to give it to me. I truly do appreciate it. And I truly do thank you. And if you're going to lose sleep over not giving me some money, hey, okay, I'll take it. But quite honestly, just, put it in your piggy bank, buy your spouse or somebody something nice. This guy needs some fish oil. His joints are all creaky. It is the Durst Scully. All right, guys. So thank you for that all again. I do appreciate it. Dresh, dude, you beat me to it. And I hope to see you for our, Sunday night communion next week. Yeah, I really do. As I'm stumbling here, I really do appreciate you guys coming through. I hope you sign up for my weekly newsletter again. Click the link for dapperdividends.com below. It'll be right there. You can check out the portfolios, do what you got to do. So I got an IPA to drink with my wife here and watch some TV. So I hope you guys take it easy. Let's get another exciting week in the books here going. And I'm going to look forward to seeing each and every one of you right back here next Sunday night, if you can make it, and tell me what you bought, what you've been thinking. This is getting annoying. I couldn't do the whole show like this. So everybody, I really do appreciate you. And thank you so very much for tuning into the live stream with me. So long, everybody. Bye.